We see business owners surprised all the time when we say, hey, your business is not quite worth what you think it is, or the other way around, that you're really sitting on something that's more valuable than you thought. Just because, again, they don't take the time to understand that. And so I think we add a lot of value by being able to explain to an owner what his business is worth.
Hello, and welcome to another episode of It Depends, a podcast series brought to you by Hantzmon Wiebel. You know that if you've ever talked to an accountant, they've told you, well, it depends. This podcast series is for business owners, leaders, operators, accountants, or someone just wanting to learn more about the accounting industry. I'm your host, Clarissa Hoffman. In today's episode, I'm joined by Chris Brubaker to talk about business valuations. Thanks for joining us, Chris.
Good to be here.
Can you tell us a little bit about yourself?
Sure, just a little. I'm Chris Brubaker. I'm a partner with working mainly in our tax and in advisory services practices.
So the topic of today is business valuations. Can you tell us what a business valuation is?
Sure. Mainly, it's an engagement where we help clients to understand what their business is worth. I mean, it's essentially sort of what it says. And we'll typically get to know a client, get to know their financial situation based on financial data. We do interviews with clients to understand their businesses and how their operations work, and then basically compare that to published information for similar companies. And it's that mixed with elements of just experience and to come up with an idea of what the client's business is worth.
So how do clients use our valuation services?
There's kind of two general areas it falls into. One is sort of a reporting situation, which those are things like estate and gift tax returns are a big part of our practice, and so clients need to report the values of their businesses on those types of tax returns, and so that's important. We also work a lot with ESOPs, which are employee stock ownership plans. They have annual reporting requirements about the value of the company, and so we do valuation services for them as well. The other side is more internal use and more planning. Typically, we'll use use valuations to help with be it estate tax planning or gift type planning. Also with exit planning. So a lot of work we do is with strategizing with owners about how they're going to get out of their business and what kind of price they can expect on a sale and things like that. So those are typically the areas where we look at for clients.
So you've already told us a little bit about this, but what does a typical engagement look like?
Usually we would first get to know the client some. That usually starts with financial statements or tax returns or things like that help us to sort of understand the client's finances. We will interview the owners, we'll interview management, just to see sort of what operations there are, what kind of risks there are in a business, which that comes into play a lot into what a business is worth. We take that information, then we also will compare it to published data about similar companies, if we can find those, and then sort of meld all that together, apply the experience we had from doing this for a long time, and see what we think it's worth to a buyer.
And then there's a report, right, that you issue?
When we do a full valuation report, which is more appropriate for those outside reporting type of engagements, it's a pretty involved report. It really explains a lot about the details of the company, about our approaches to doing the valuations, and that's important because it has to stand up when a government agency or whoever is looking at it. They need to be able to look at that and see where the value comes from to be able to rely on the valuation. The other side we call it calculation of value. We don't do as many procedures there. The report is generally much shorter. It's more appropriate for internal use and for planning. We don't go into as much detail about explaining the company because it's really meant for the owners who understand their company well already. It's not going to anybody else who really needs to understand the value, and so those reports are typically shorter.
What are some of the benefits to a business owner of engaging for a valuation service?
Yeah, some of them, like the reporting side, that's just compliance and things they have to do. Where I think the real benefit can come is sort of on the planning side. Most business owners are so busy operating their businesses, they don't really have time to to understand what their business is really worth. We see business owners surprised all the time when we say, hey, your business is not quite worth what you think it is, or the other way around, that you're really sitting on something that's more valuable than you thought. Just because, again, they don't take the time to understand that. And so I think we add a lot of value by being able to explain to an owner what his business is worth, and then steps to take that might make that value improved.
So that kind of alludes to other services that you provide in your practice, tax planning, and probably some consulting as well.
Yeah, we do tax planning, sort of like I had mentioned, exit planning. So that's, the valuation's a big piece of that, understanding what the business is worth today, understanding what options there are for down the line, and how again, steps the business owner might take to improve the value of the business, to improve just the operations of the company. A good understanding of value is a good first step in doing those.
So can you elaborate a little bit more on what business valuations would be used for in the estate and gift world?
Sure, yeah. There are, the estate and gift rules are fairly complicated, but it boils down to there's a tax on a transfer of someone's assets, either at the time they give the assets away or at the time the decedent dies. In both cases, you need to have an understanding of what the business is worth, if that's one of the assets in someone's estate or if it's part of a gift. And so it really is important to understand the rules for reporting those. There are some specific sort of valuation concepts that apply to federal gift and estate tax law, and so we have to understand that as well. But basically, it boils down to understanding those rules and helping to see at that point in time, whether it's the decedent's death or at the time of a gift, what the business was worth at that time. Planning comes into play there as well, because those two taxes do interact so much. Doing gifts while a business owner is alive can reduce an estate tax down the road. And so, we can help understand what the business is worth, what a gift could be without running into the gift tax that may help to avoid some estate tax later. And so it really is kind of important to understand there, just to be able to do any kind of planning for estate taxes.
So what about benchmarking? How does a business valuation play into benchmarking?
Yeah, that's useful too, because it goes back to what we talked about, where owners a lot of times don't understand what their business really is worth. And so it's just another way. Businesses do like to compare themselves to other businesses in the same industry, right? And so knowing what they're worth versus what another business might be worth, and then being able to explain what's the difference between your business and the business down the street that's doing the same thing as you are, or just the typical business that's in your industry. That can be helpful to point to where you might be able to improve.
So you talked a little bit about using a business valuation as an exit plan, essentially as a starting point,
Yeah.
right? But how does a merger and acquisition kind of tie into that?
Yeah, and usually in the merger and acquisition sort of transactions that we do, it's a little bit sort of the first stages of thinking about selling a business is where we would be involved with, at least in the valuation piece. Typically we'll have an owner who may have an offer coming from a third party to buy the business. And the owner, again, doesn't know whether it's reasonable or not. And so we can do services to say, that probably is fairly typical of what we would see in the market, or it's not. And it sort of helps in the negotiations there. We don't really set a price in doing that, because you have third parties and they're going to negotiate to get to a price, but it's sort of in the more planning phases where it's important.
So in everything you said, it sounds like planning is really key in being proactive.
It really is. I mean, I think you can't really improve your business, I think, without thinking about it a little bit ahead of time. Most of the things we talk about for improving value are going to improve day-to-day operations. Like we like to say that exit planning is business planning, and so it really does help with just the general operations of a business.
Thank you so much, Chris, for all this information. I know it'll be very informative for our listeners.
I hope so. I enjoy talking about it anytime. Do you know what you're going to be speaking about next?
Well, it depends.